G'day everyone, and thanks for joining us for our 2021 Open Banking in the Digital Financial Services Environment eSummit series for WA. I'm Mark Lindrum, the West Coast State Manager for the FBAA, and I'll be your MC for today. Now, this is our first eSummit for 2021, so this will run over today and tomorrow's sessions with beneficial content for you to take away. I do hope everyone is keeping safe with the current changes from COVID. Obviously, we had our lockdown last week, which was very good, and I'm glad that we can still join digitally to share in our support for one another. And please do share your webcams. I know we've got a lot of people that have tuned in today, so please do share your webcams. We want to see everyone's smiling faces. Really gives a lot of energy for our presenters to come back to you guys with, and we'd love to see them and to keep connected with you. So for today's session, please let's get started. Now, there will be 1.5 CBDs allocated to each eSummit, so that's for today, and another 1.5 for tomorrow. You'll receive an email with the CBD code and a survey following, so tune in throughout the whole webinar to ensure your attendance is marked and to receive that as well. We'd like to thank our sponsors for their support. It's been a tough 18 months, and yet they continue to work closely with us to ensure that we can still provide you with the education assistance you need during this time. Please don't hesitate to get in contact with them. They're always there to support you, and you'll get their contact details in the follow-up email after today's session. Now, members, don't forget you will receive 10% off your membership every time you refer a new member to the FBAA. Download our FBAA app to easily access information, updates, and upcoming webinars and events to register for. Good, easy calculators that you can access on there as well. We do have our new improved members area as well, so please have a look at that. It has just been rehashed in the last couple of months. It's a lot better to navigate. It's a lot more modern looking, so please do have a look and check that out. Our broker support program is still available for anyone to access as well. We've added our big digital educational and knowledge testing course, a bit of a tongue twister, that one. So if you haven't done that, please do have a look on there. If you do have any kind of issues that are going through with BID as well. Now, the agenda for today's session was on the registration setup as well. It is going to be in the chat box on Zoom as well today. Now, to commence today's session, we'll now hear from the Senator, the Honourable Jane Hume, with an update on open banking and digital financial services environment, what the government is doing and planning for the future. So over to you, Senator Hume.
Hello everyone, and thank you to the Finance Brokers Association of Australia for the invitation to speak to you all today. A lot has changed in the past year, but buying a home is still one of the most significant financial decisions that Australians make. And it can be daunting, and I want to recognise the role of brokers in matching borrowers to lenders, advising on loan application processes, and negotiating interest rates. Australians are increasingly recognising the value of mortgage brokers to help them navigate the world of purchasing property. In 2003, mortgage brokers accounted for just 25% of total home loans. Now today, that number is 60%. Demand for services will continue, and recent Royal Commission reforms will only enhance consumer confidence in your sector. It's also inevitable that technology and innovation will play a greater role in future. And I think that it's terrific that the Finance Brokers Association of Australia has devoted today's webinar to open banking and digital financial services. As Minister for the Digital Economy, I am passionate about the benefits of open banking. Now, it's still early days, but the consumer data right will revolutionise the way consumers, both individuals and businesses, use their data to compare prices, switch products, manage their finances and cash flow, and streamline banking product applications, including loans. I'm equally excited about what this means for the growth of Australia's fintech industry to deliver innovative, data-driven solutions that improve Australians' lives, drive competition and productivity gains across the economy. Australia's journey towards the consumer data right, the framework that underpins open banking, started with the 2014 Financial System Inquiry, which recognised increased data sharing could improve financial services outcomes. Now, this was followed in 2015 by a competition policy review, which recommended improving individuals' access to their own data to better achieve consumer outcomes. The evidence base continued to build, In 2017, the Productivity Commission's inquiry into data availability and use proposed the creation of an economy-wide comprehensive right to enable consumers to control their data. Now, at the time, the Productivity Commission said there is enormous untapped potential in Australia's data. Everyone, including the government, agreed. In the 2017-18 budget, we announced the introduction of open banking and commissioned a review to recommend the best model for Australia. The government subsequently announced in its response to the Productivity Commission's inquiry the creation of the Consumer Data Right, an economy-wide approach to data portability, implemented first in the banking sector and soon to be followed in the energy and telecommunications sector. The Consumer Data Right was viewed as a game changer from the very start. While modelled in part on the open banking regime in the United Kingdom, the Australian framework was established with a founding principle of universality, which, among other things, put Australia at the fore of data sharing regimes globally. It meant that it was designed with economy-wide application at its very core. The Consumer Data Right framework enables consumers to safely, efficiently and conveniently harness their own data and information held by Australian businesses for their direct benefit. The framework will enhance data-driven innovation and make products and services more affordable by putting downward pressure on prices as a result of increased competition and greater choice. Importantly, a fundamental design feature of the Consumer Data Right is robust privacy and security protections, which will help build trust and confidence in the system. Now, these protections allow consumers to control what data is shared and with whom and for what purpose, and when it must be deleted. Now, open banking launched on the 1st of July 2020. It started with the big four banks, ANZ, Commonwealth Bank, NAB and Westpac, providing access to certain consumer data. And this included data on savings accounts and credit accounts. From the 1st of November, the big four started providing access to mortgage and personal loan data, followed by lines of credit and trust accounts in February 2021. A number of businesses that help consumers to make the most of their data have become accredited data recipients, or ADRs. And we expect the number to steadily increase as the rollout progresses. We are also now seeing banks also choosing to become ADRs, with Regional Australia Bank and the Commonwealth Bank of Australia becoming accredited, and more are expected to follow. The next milestone is fast approaching. Starting from the 1st of July this year, 12 months after the big four banks, the rollout of open banking in the non-major banks is set to occur. Now let me step through how the open banking process works in practice. Under the Consumer Data Right framework, there are three main parties in open banking. First, there's the consumer, an individual or a sole trader business. Second, there's the data holder, a bank. And third, there is the accredited data recipient, or ADR. Now this could be a budgeting app, for example, or a rival bank, but either way, they must meet stringent accreditation criteria, including information and security and privacy requirements. The future applications of the Consumer Data Right are endless. A customer could direct her bank to share her data to an innovative ADR, say an app, which might be able to help her find a better deal on her financial products and services based on her individual circumstances. And as the Consumer Data Right is implemented in more industry sectors beyond open banking, now that customer could eventually use the same innovative application to get a better deal from energy and telco providers and beyond. At no point does the customer need to share her banking login details or her password to do so. The customer is provided access to her data in minutes rather than in weeks, and she can share her data easily with other accredited data holders or recipients. And importantly, the customer has control of her data throughout the entire process. She can view and manage and withdraw consent for data sharing, as well as ask for her data to be deleted when she's done. In January 2020, an inquiry into the future directions for the Consumer Data Right commenced, led by Scott Farrell. The government asked the inquiry to consider options to expand the functionality of the Consumer Data Right. So this included how it could be expanded for consumers beyond just choosing to share their data and towards applying for and managing products, including by initiating payments. It also examined how the consumer data right could promote innovation through the creation of products and services that are mindful of the needs of vulnerable consumers. And importantly, the inquiry was asked to identify how the CDR could enhance consumer, business and economic opportunities. The inquiry came back with 100 recommendations, and the government will respond to that report later this year. Providing for deeper functionality alongside the government's accelerated expansion to other sectors puts Australia at the cutting edge of digital and data-driven economy. During COVID-19, Australia vaulted forward in digital adoption for both consumers and businesses, and we now have an opportunity to keep that momentum going right across the economy. And that's why the government is investing almost $1.2 billion in Australia's future through the Digital Economy Strategy. The Digital Economy Strategy provides a roadmap to grow Australia's future as a leading digital economy and society by 2030. As part of the strategy, we have committed $111.3 million to strengthen and expand the consumer data right economy-wide. Now, we've already commenced implementation in energy, and we've announced telco will be designated as the next sector. To inform the sequencing and the prioritisation of an economy-wide rollout, Treasury is also undertaking a strategic assessment which will inform a roadmap for implementation. It will also expand Australia's international influence to establish an interoperable and rules-based approach to international consumer data portability and sharing frameworks. In the new area of open banking, Australian fintechs have a chance to seize on opportunity. It's an ideal time to innovate and expand as people look for new ways to manage their businesses and personal financial affairs. We have a tax and regulatory framework that supports innovation. We have the enhanced regulatory sandbox in place. We've introduced restricted authorised deposit-taking institution licensing regime to reduce the barriers to entry into the banking sector. We've established the equity crowdfunding regime to expand access to finance for startups and early stage businesses. And we've established the UK-Australia FinTech Bridge, and that's our intention to negotiate a new bridge under our digital trade agreement with Singapore. And we're not stopping there. We'll continue to look for exciting opportunities and to encourage and support startups and industry to support Australia's economic recovery and spur it on. So, I'd like to thank the Finance Brokers Association of Australia for hosting today's webinar. The Morrison government believes that data is critical to building a modern digital economy and to delivering better outcomes for all Australians. Open banking and the consumer data right is just getting started. We understand the idea of letting money work for us with investments, but imagine if we could do the same thing with data, where consumers let their data work to their advantage and consumers trust that their data won't be misused. So this is what the future of the consumer data right could look like as it expands. Thank you.
Thank you very much to the Senator there. Sounds like there's some really good tools coming up for the open banking for brokers specifically out of that. So looking forward to what the future holds on there. Now, up next, we've got Kerry Sainsbury from Credit Fix Solutions, who will be outlining how credit impairment impacts the process flow and getting the appropriate applications approved by online lenders. Now, over to you, Kerry.
Thank you, Mark. Thank you very much. Hi, I'm Kerry Sainsbury. We also have fell down as I started talking. We also have Charmaine here, who is the Western Australian BDM. Charmaine, say hello to everyone. You're on mute.
Yeah. Hello, everyone.
Awesome. So for everyone that doesn't know me, my name's Kerry Sainsbury. As I said, I'm the Queensland and South Australian BDM. I'm just assisting Charmaine today. A little bit of an introduction, I guess, on Credit Fix Solutions first. I always like to explain how I sort of came about Credit Fix Solutions. So I've been in the industry personally for a good 20 years, getting a bit sad now. I've been in the specialist side of the industry for a good 10 years. My first role as a BDM was with a specialist lender. And that's how I came about this side of the industry. I felt that it was my calling as such. And I've stayed in this sort of side ever since. So when I was working at a specialist lender, I would obviously speak to brokers with customers that had defaults. I would automatically recommend a higher rate, 6 or 7%, not realising there was an alternative option to repair customers' credit. So I had a friend come to me who wanted to become a mortgage broker. Of course, not a home loan, so I wasn't sure what to do. I was always told credit repair was tarnished, it didn't work, they charge up front and it doesn't work. Now, being in credit fix or in credit repair, that does happen. There are competitors that do charge up front and don't do the wrong thing, but there are also companies like us that do the right thing. So I had a friend that was a mortgage broker, wanted to become a mortgage broker. He had 3 defaults due to a divorce. I asked around with a competitor and was quoted 10 grand up front to remove those defaults. And I thought there must be an option, a cheaper option. So I came across Victoria Costa, who is our CEO at Credit Fix Solutions. And at the time, this was several years ago, her fee was $9.90. And that's still our product. Our fee is a little bit higher. Our fee is $1,500 for a default under 5 grand, but our product is no result, no fee. And I think that's what, personally, I think that is what sets us aside. There is nothing to pay unless we can fix the credit reporting for you. Credit reporting, I've been with Credit Fix Solutions now 2 years. There's now 4 of us BDMs, including Charmaine. And where was I going with that? I lost my train of thought. Thanks for laughing, Mark. There's now 4 of us BDMs, that's what I was talking about. In the last 2 years, credit reporting has really changed. I know it was sort of just defaults and court actions and judgments, but as you know, a lot has changed. We're adopting the UK version of credit reporting. So eventually we're going to get to 40 pages. It can be good, of course. It can be bad, of course. So as long as the customer is paying all their debts, as of course there's not little next to none hiding anymore. So as long as the customers are paying everything on time, it can really increase that credit score. If they're not, it really does impact us. We've got negative data reporting, plus we've got positive data reporting that's gone on top that can affect it. So definitely worth a shot to give us a call these days, as there can be just one late payment that we can fix. What we're basically looking for is errors and loopholes. In the Credit Reporting Legislation and Privacy Act, I have a lot of brokers come to me and say, how can this work? And still think that credit repair is tarnished. What we're doing is finding legitimate errors in the Legislation and Privacy Act. So that might be where the lender hasn't followed the correct protocol in terms of, for example, the customer's gone through a divorce and they haven't asked about the financial hardship ground. So that gives us reasoning to follow where the lender has missed. We see it a lot. The lender really puts these defaults, court action judgments on these customers quite unfairly, quite quickly. So that's where we come into play, and we can remove these issues on the credit report legitimately. Our process is 3 to 8 weeks. So that would be the only downside that I would mention. The reason why it takes 3 to 8 weeks is because we talk to the lender, and then they have 30 to 40 days to get the documentation back to us. Then we're finding the errors. If they don't get back to us, then we have to talk to an ombudsman. So it's really dependent on the lender and how quickly. We've been around for 8 years. So, I mean, I've had one recently that took us a couple of weeks. So it just depends on the lender. In regards to your process, I guess, and how we can save time, there's always 2 options. So if the customer is really emotionally connected to that property, then there's always an option that you can put that customer to a specialist lender at a higher rate. But then of course there's a journey. So we could repair that credit, and then in 12 months they could move on. So there's always 2 options that we can assist with. It just depends on how emotionally connected that client is to the customer. Upfront checks as well. So I always recommend doing an upfront check, especially on Equifax now. you might think it's I guess there's no such thing as a squeaky clean customer or a bad customer. One late payment can happen to anyone. So make sure you're doing your upfront checks. We've got websites for free websites as well. There's a lot of legitimate websites that are market employees by the big banks to get them in. So if you ever need the legitimate websites to do some free checks, we've got that. We've got an amazing ebook as well and some templates that we can assist with. We're really big on value adding to our brokers, so I can email that around. In regards to the upfront checks, there's not just Equifax, there's Allian, Experian, and then there's Creditor Watch, which is the new company crediting report. The website for Allian is creditsimple.com.au, Experian is experian.com.au, EXPERIAN. I would only recommend that if you do an upfront credit report with Equifax and there's a default or there's a late payment or too many inquiries, then make sure you're doing that extra 5 minutes due diligence and do an Experian and an Allian check. I've had a lot of brokers that have done an Equifax check, submitted it to a bank, that it's come back with a decline because there's a default on the Allian. Allian is the old Dun and Bradstreet credit reporting. Unfortunately, ridiculously, they're not linked. So we've got 3 separate systems and they're not linked at all. Very frustrating. Wish I could change it, but unfortunately I can't. Buy now, pay later schemes, anyone who has heard me present knows that this is one of my biggest frustrations. For those of you who don't know, one inquiry can impact the customer's credit score by up to 150 points, which is crazy. If you think about it, we've only got 1,200 points every 5 years. We need a good 600 for a lender that credit scores. A couple of inquiries, a couple of late payments, for example, there's your credit score shot. So again, we've got that in book that I highly recommend to maybe even send it out to your database and your referral partners, because I guess the aim of the game is if we can educate educate before it comes to finance. We're big on that. And lastly, just debt negotiation as well is another frustration. So we get a lot of calls where the customer has gone into a Part 9 or 10 agreement. Unfortunately, it's too late when they've come to us with that. There's nothing we can do with bankruptcy. However, we do have a debt negotiation service. So as long as the customer has 30% of the cash up front, it can be borrowed. We can negotiate these debts for the customer and get them out of a yucky position, which is normally a business failure, divorce, sickness, etc. So we can try and reduce that debt down to 30% on financial grounds, as long as we've got some cash up front to negotiate with. We charge 22% of what we save. So most likely it's always going to be a benefit. Hopefully that's a few tips. I just wanted to mention, I guess, a lot of, like, in my sort of side of this industry, a lot of brokers are still scared to give us a go. It's a solution. I think the industry will be changing now that we have to be ASIC approved. I hope in future that it's a process that has to be looked at instead of just a sort of a side thing. Credit repair needs to be looked at to assist as a solution. And basically, yeah, if you've got any credit reporting that you have any doubts on, we offer a free health check service. So if in doubt, just give Charmaine a call and we can definitely provide a free quote or any advice, given that we've got our lawyer service as well. Thanks, Mark.
Cool, thank you so much for that. And that ebook is a very good read. We've been banging on about education for as long as I've been with the association, pretty much, and it is chock full of information about things that you might not think about, but certainly do impact, especially those buy now, pay laters. So I've probably been guilty of one or two of them myself back in the days, maybe not even that long ago, but they do affect your credit report quite a bit. So luckily for me, it hasn't adversely affected me too much, but it certainly can in a lot of occasions. So a bit of a slap across the wrist on my part, for sure.
Yeah, but the problem is we're not educated, hey?
Yeah,
that's
correct.
The issue. there's no, there's no TAFE course or uni course to let us know what not and to do in finance. It's up to us, I guess, to educate consumers.
Yeah, absolutely.
Like yourself.
Absolutely.
Back on
Yeah,
the
I
risk.
know. What an idiot. Jeez.
Now you know. Now you know.
Thank you so much, Gary. Always a pleasure, mate. And
Thanks,
thank you, Charmaine.
everyone.
Thanks, Mark.
Cheers, guys. See you later. Okay, now next on the agenda, we've got a panel of experts, and we're going to talk about bank SLAs and loan application processes. Now, we've got Dave from Finstro, we've got Cooper from Speedy, and we have Ben from On Deck. So welcome, gentlemen.
Thanks, Mark.
G'day, guys. Always that nice awkward silence in between there. Fantastic. Good to keep those going. Now, we'll start with you, Robbo, up the top. You're purely at the top of my screen, so apologies for anyone else there. What is it about your product that sets you apart from other lenders, would you say, mate?
Absolutely, mate. It's about policy, rate and fees. We're very transparent in how we deliver our product to market. So I'll start off the bat with some of our policies which differentiate us to the market, and that's we'll lend to 150% of gross turnover, whereas the majority of our competitors will go to 80%. We don't rate for risk. So if you qualify, we're not going to categorise you or pigeonhole a certain business and associate a rate or a heightened fee schedule for that. So once you get through the front door, then you qualify. The rates and fees are exactly the same as the baker or the candlestick maker down the road or whatever. So it's open and transparent, no shop front window fees, we call them, or simple interest rates or anything like that. It's really transparent. 6-month ABNs as well. We've got a very commercial level head about how we go about assessing most businesses as well. So it's probably the key standouts for us.
Thank you very much, mate. What about yourself, Ben?
Yeah, thanks, Mark. I'd say the main thing in our product that sets us apart would be the security piece. So similar to all the other unsecured lenders in our space, what we do is we can go up to 250,000 completely unsecured, so just with a director's guarantee. So yeah, we won't place above a certain amount, place a caveat or an all-pap in the business. So we have the ability to lend up to 250 unsecured, really, which I think is a great space in our market. The other one, similar to Dave touched on, we can go up to around 150% of monthly turnover. With our ALS last month actually sitting around 80, that's our average loan size, sorry, sitting around 80,000. So we have seen that increase over the past few months, previously sitting around the 45, 50K mark. So yeah, it's good to see that increasing. So it means, we're lending more, which is nice to see.
The 250 is not anything to be sniffed at as well, so it's a great way of getting a fair bit of cash there nice and easily. And what about yourself, Cooper?
Yeah. So at Speedy, we're a little bit different than some of the other SME lenders. So we're not looking at turnover, credit files, things like that. The three things we're looking for is just the loan purpose, the exit strategy making sense, and then we are a short-term lender using security. So we do look at using property as security for our loans.
Cool. Thanks very much, mate. So I'll stick with you, Cooper. If I was a startup company that's been trading for 6 months, but has a high income of over 100,000 already, what would be the maximum amount I could borrow, and what documents would you require? Now, would it be just based on the loan purpose? So it could be any type of company.
Yep. So it can be a company that's only been registered for a day. Pretty much, like I said, we're just looking for that loan purpose and the exit strategy making sense. In terms of the maximum loan amount, aside from it obviously making sense and not some stupid amount for what the loan purpose is, the thing that would determine that would be the LVR on the property. So typically we go up to about 75, 80% LVR. And loan documents, it's just the application form, mortgage statement, rates notice, and the director's ID.
Cool. Thanks very much. Ben?
Yeah, so startups are a bit tricky with us. So one of our main requirements is we need a business to be around for at least 12 months. So 12 months ABN. We can register in GST in closing, but we can't do a startup for 6 months, unfortunately. We can make some exceptions. For example, if we can prove that the customer applying who's just taken over was actually responsible for the day-to-day running of that business for over 12 months, then they've just sort of had it built into their employee contract, or they've just got a good opportunity to take over the business, then we can make some exceptions there.
Cool, that's great. Thanks very much, mate. And Robbo?
Yeah, 6-month ABN for us, and we'll do a load up to 100. We'll need to see some financials and some balance sheets, P&Ls to 150 for that particular scenario, mate.
Thanks very much. And again, I'll stick with you, mate. So we've got Mr. Smith here. He's managed the restaurant for over 15 years, and he's decided to go out on his own and buy his own restaurant. And he's financing fixtures and fittings. Is this something you can look at? Is there any other finance you can offer him?
We are rolling out something specific for brokers, which we go direct to market with, which is the Trade app. So as opposed to our flagship line of credit with the 3 sub-accounts in it, we can now start to offer a trade account via brokers. So that can be as little as $500 up to 50 grand, quick 5-minute approval process, as long as he fits the credit criteria, which is outside of the LOC. So there's a whole, it probably ties in with the Senator's comments about all the new products that are going to start to be launched really soon, which I'll go into a bit later. But yeah, we can do a trade account for to help him out.
Cool. Thanks very much, mate. Cooper?
So, like I said, with Speedy, it's pretty straightforward with us. It's the loan purpose exit strategy and the LVR. So it's something that we'd be able to do, definitely.
Cool. Awesome. Just have a chat to you about that. Excellent. And Ben?
Yeah, so similar as I was saying before, we need the applying applicant to be running the business for at least 12 months. So if he is, say, running a pizza shop and he's looking to just start up a new business that is completely separate, then we wouldn't be able to do that. But if he's taking over the existing one that he's been the manager for 15 years, yeah, definitely something we could have a look at.
Cool. So just keep the documentation from all the previous arrangements, everything like that, and then you can just lob that through to you guys. Cool. Thanks very much.
Exactly.
Now we've got Mr. Flintstone here. He needs some financing stock that he needs to have next week, but some of his accounts that are due to pay are running late, or due to pay him, sorry, are running late. Would you look to still finance him, and if so, on what terms, Ben?
Yeah, definitely. This is probably one of our most common scenarios, purchasing stock when they're not getting paid. So what we look at for applications is we only collect 6 months of bank statements, but we only really do our financial analysis on the last 3 months. So provided, the 3 months will service what they're looking for. No issues with that one. And then, as I was saying, generally around 150% of that monthly turnover. That'll determine how much we'll approve them for.
Thanks, mate. And Robbo?
Almost identical. I guess for us as well, now we've got a number of different options which are going to be more cost effective depending on Mr. Flintstone's scenario. Could be a trade account, could be the line of credit, could be our invoicing product as well. So it really depends on the client's situation and what they ideally need.
Thank you. And Cooper?
Yeah, so for Mr. Flintstone, we typically do a lot of these bridges where you're buying stock and then selling them at a later date. So as long as they have property, we'll just set them up with an interest-only product, and then once they sell their goods, then they just do a lump sum payment against the loan. Typically, we can do up to 18-month terms.
Cool. Thanks very much, mate. Now, Happy New Year to everybody on the call as well. We're obviously in our new financial year, so celebratory times for all. But considering the time of year we are at, who will lend to ATO debt? Now, Robbo. Were you listening, Robbo?
Sorry, no. There was the door slam behind me, mate. I didn't hear you call out.
The old door slam, of course. Will you lend to ATO debt?
Yes, 100% yes.
Cool. Easy, Ben?
Yeah, we can lend to ATO debt. Our general rule, similar to the other lenders, is we don't like the ATO debt to be greater than 10% of what the annualised turnover is, but anything less than that, and if we can see they're either on a payment plan or making manual payments, happy to do it.
Cool, thank you. And Cooper?
A quick one for Speedy again, we would lend for ATO debt, definitely.
Thanks very much, guys. It's good at this time of the year. Now we'll go through some different types of scenarios now. You can put your hand up or you can shout out if you like, but we've just got a few little different ones here. Can you let us know the maximum LVR and loan amounts on a hobby farm?
Yeah, so at Speedy, we do lend against hobby farms. Typically, if the farm is more metro, essentially, we'd look at going a high LVR up to this kind of 75% mark. The more rural it gets, it goes down to around that 50% LVR mark.
No worries. And obviously being here in WA, or we're in WA at the moment, do you have any kind of examples of anything over here at all that you can think of at the moment? Or
off the top of my head, no. We did one in South Australia in Port Lincoln the other day. That was still classed as metro. So we have a kind of list of postcodes. So a quick call with myself or anyone else here at the team, we could kind of tell you if it's going to be a rural property or metro type LVR based off the postcode pretty quickly.
Cool, easy, thank you. Robbo, Ben?
We can't do hobby farms, unfortunately.
We would have to look at it in the old case-by-case bracket.
So yes, no, maybe. Cool, thank you very much.
Yes, no, maybe.
Excellent. Now we've got a non-income producing farm as well now.
Quick, same again for Speedy, and we do lend against income producing and non-income producing.
Good to know, thank you.
We need income, mate, so that'd be no go with us.
Yeah, similar. We need to see revenue coming into there to the last few months of bank statements.
Cool, thank you. Now we've got an Airbnb. Now I'm actually sitting in an Airbnb right now in my Netherlands holiday. It's a long story, but yes, I'm on a Netherlands holiday for the interstaters you don't know, but I'm enjoying my Western Suburbs lifestyle here for a fraction of the price. So there we go. That's a little personal story, but anybody will lend for Airbnbs.
Yep, same again for the Speedy. We just class that as an investment property still, regardless of what they're making income from. So yeah.
Thank you.
Yeah, we'd look at those as well.
Yeah, we'd have a look. We'd just have to assess the bank statements and determine the serviceability there.
Thank you. And look, we've really gone through the startup, so I won't go through that one again. Now, is there any kind of specials that we've got on offer? And I'll start with you, Robert. It sounds like you've got a few things in the pipeline there.
Yeah, there'll be some more media and sort of press releases for brokers around our trade app solution. So stay tuned for that. There's also some exciting stuff that we're going to be able to monetize for brokers that have merchant clients. So the more of your sort of tertiary level businesses that sell or on-sell, there might be a wholesale on-selling to a business. So we'll be able to set them up with a platform and do a full B2B system for them. And their client will be able to offer their business clients interest-free terms. So there's a lot of really exciting stuff around the corner.
Cool, thanks, mate. And Ben?
Yeah, so no current promotions. What we are looking at doing, we're actually working on a new tech platform. So just to improve the whole customer experience piece for customers and brokers alike. So that'll be some changes to how an application is submitted from a customer through the website, as well as brokers through our partner portal. So it'll be exciting once that's launched over the next few months. And with that, we'll be launching a couple of new products towards the end of the year too. So yeah, as we said, we'll probably do a press then and go into the media, but yeah, more to come.
Always exciting to get some new tech platforms for sure. And Cooper?
Yeah, no new promotions or anything like that currently. The only big change, we do have a new product where we can lend at 6.99% on first mortgages with a valuation as a condition. But that's pretty much it.
Thanks, guys. And the last question, I'll keep with you, Coops. Have you got any weird or wonderful scenarios that you've had recently that have gone through?
Not the most recent one would probably be, we did a startup loan for it was just a Plus Fitness. They've run one in the past, and because they had that history, but the business hadn't been traded, they use their property to access their equity and put them on 12 months interest only until they can refinance into a more traditional P&I facility. But not too wacky, that one. We do quite a few of those, but hopefully I'll have a wackier one for you next time.
Yes, please keep your thinking cap on. But look, it's one that works. So,
Yep.
you know, that's what we actually want these days, isn't it? So, such solution based and it's actually worked.
Definitely.
Thanks, mate. And Robbo?
Yeah, we regularly come across weird and wacky. Currently working on one for $500,000 in mining services. It's not a weird industry, as we all live in a mining services town. So, but it's more about the size of the deal. I guess that's where I see a lot of appetite for where the business is heading, as well as having that capacity to lend larger sums of money, where banks are either taking forever to lend out, or there's an opportunity where the business only needs the money for, you know, a short period of time. So yeah, we're seeing a bit more of that.
Thanks, mate. And Ben?
Yeah, one that actually springs to mind, we actually got an approval for this morning. So it was actually a bricklayer, and the issue with this one was his credit score came sort of around 350. Now normally we have a requirement of 500, but so what was driving the score down was a $200 default from 2019 that the customer wasn't aware of. So we're able to look into that, and the cash flow was decent, so we could make an exception on that, just given the size of the default and when it was from.
Cool. That's great. Well, look, I think that's proves it's not a no until we get told it's a no, pretty much. So always ask the question. I'm sure anyone on this panel doesn't mind getting a question about things. And, you know, if it is a no, then, you know, it's probably a quick one, but always just ask that question, guys. Well, look, that wraps up the panel. So again, thank you from Dave Robbo, mate. Now I'm going to get my words mixed up. From Finstro, we've got Cooper from Speedy Finance, and Ben from On Deck. Thanks very much, guys.
Thanks, Mark.
Cheers, Mark.
Thanks,
Cool.
Mark.
Now, next we've got Nicolette Spicer from Assure Counselling, who'll be presenting on easy, healthy habits on behalf of Suncorp. Now, over to you, Nicolette.
Hello, FBAA. I am Nicolette Spicer from Assure Programs, speaking to you today on behalf of Suncorp. I'm so sorry that I can't be with you personally. I am just taking a tiny little bit of leave, but I'm thrilled to be able to talk to you about some healthy habits today. And as I speak, hopefully you will be able to take at least one thing home with you. We provide the free counselling available for all FBAA members and their family members. I've got this small little presentation that I'm sharing with you today as well, just to quickly remind you about what is available to each and every one of you. This free confidential service, if you take the number down now, 1-800-808-374, being able to talk to a psychologist day or night about anything that is bothering you, workplace or personal. 4 sessions of confidential counselling available for you and any of your family members, funded by Suncorp, which is magnificent. 4 sessions as well of wellbeing coaching. So those of us who might be going along okay, just need a little bit of assistance to maybe set some goals, work on understanding what their key strengths are, maybe just feeling a little bit down in the dumps and just need some enlightenment and some guidance from a professional about how to be the best version of themselves that they can be. Plus, also available 1 session of legal advice in there too over the telephone. But the purpose of today's talk is really around positive counselling. So our cornerstone of our business is around positive psychology. So that's enabling people to go from good to great. So we're really pleased to be able to provide this for you today. If you need it at any time, it's just helping people look at their well-being and maybe tweaking just a couple of things. I think the last couple of years have thrown lots of our lives into havoc. Where we're making weak nutritional choices, we're not sleeping, we're quite agitated. Some of us feel hopeless about the future, some are fighting with loved ones. Whatever it is for you, there is assistance available. So I just want to share with you a couple of tips that I always find helpful. I'm not a psychologist. My job at Assure is actually to promote the use of the service and talk about how awesome it is to see a psychologist and get things off your chest. But sometimes all it is really is just making some adjustments to lifestyle factors. And the first one is around nutrition. Now, the Heart Foundation proudly promotes 2 bits of fruit. So I've always got my apples. I don't know if you can see them because of my green screen. 2 bits of fruit every single day, plus 5 vegetables every single day, and encouraging each of us when we shop to shop around the outskirts of the supermarket. So not in the middle where things are packaged, sometimes delicious, but not necessarily good for us. Steering clear from soft drinks and energy drinks. Even though they might be delicious, they're actually not that good for our mental health and well-being, or our physical health and well-being. Making sure each of us do a little bit of exercise every day, 20 to 30 minutes. And it might be things as simple as incidental exercise, walking to get the coffee, standing up, doing some exercises at your desk, maybe some, little stretches at your desk, or some deep diaphragmatic breathing. They call it square breathing, and it's just taking a moment and going through maybe 10 rounds of breathing in for 4 seconds, holding for 4 seconds, and exhaling for 4 seconds. Doing that on repeat for about, maybe 10 rounds enables lots of oxygen to get to your brain and just makes you feel so much better and have really clear thoughts. Another ripping suggestion, in my opinion, is maximising hydration. So rather than having, coffees and teas and energy drinks or soft drinks on your desk, making sure you always have water. So the recommendation is to drink a couple of litres of water every single day. Making sure that you spend time connecting with good, happy people, those who drag you up instead of those who drag you down. And I think, look, there's times where you're going to hang out with negative people, but it's just really important that you're able to identify it and don't let them drag you down. And if they are dragging you down, come and talk to one of our psychologists about some strategies to hopefully encourage more positive and flexible thinking. Taking the time to go device free, which is something that I actually myself need to adopt a little bit more of, but try it 1 night a week, putting your phones away, spending time engaging and connecting with those that you live with, whether that be family members or flatmates, or maybe you live alone, but making sure that you just keep off the devices and do something else. Listen to some lovely music, burn a candle, read a book, dance, do some stretching on the mat, but just making sure that we just keep off the devices for 1 night a week is actually feel fantastic. Being grateful for the things that we have, not saying that you need to have a gratitude journal, but sometimes I think just being really grateful and thankful for the things that we have. Great little tip is before you go to sleep at night, just to close your eyes and think of 3 things that you are grateful for in your life. Taking time to reflect, making space in your life, 20 minutes for, maybe it's deep diaphragmatic breathing, or maybe it's engaging in a hobby, maybe it's spending time talking to a loved one, but 20 minutes every single day for you, investing back in yourself and filling up your own cup. And if you need some assistance, we are here to support you at any time. So we're only a phone call away, 1800 808 374. Ring us, whether you're broken or bothered or having a really tough time, or if you're just not looking forward to the future or feeling as hopeful as you normally do, ring us and we will be able to assist. Plus, we have got a great website that I would encourage you to have a look at, some excellent tips and tricks on there and some lovely little learning videos around mental health and wellbeing. Thanks so much for your time. Take care, everyone. Bye for now.
Thank you very much from Nicolette from that. Please do take advantage of these. All the information is on our website as well. So please, if you didn't take note of the number, it is all on our website. So please do check that out if you need to at a later date. Now, next we have a local market update, and we have our WA State President, Trent Carter, joined by our other councillors as well. So I'll pass you over to Trent. And you're on mute. Still on mute. Still on mute, Trent.
I'll kick off again, huh? You think I'd do enough of this that I wouldn't get caught out like that, hey? But anyway, I'll start again.
Over to you.
Yeah, look, thanks. And what I was saying is it gives me great pleasure to introduce 2 of our local councillors here today. We've got Jill Fleck and Nick Harper joining us today. Unfortunately, Nicole, who we planned to have on board, couldn't make it today. And one of our regional councillors, Ryan Miller, who's based down in Yallingup. He's lucky enough to be able to scoot around the Perth metro area and be somewhere in Kalbarri on holiday. So I wouldn't dare interrupt that.
But yeah, look, today is all about a get to know you session. So I suppose, Jill, we'll kick off with you. And what I'd like you to do is sort of introduce yourself a little bit, why you got into broking. Let us understand who Jill Fleck is and maybe New Age and maybe what areas of specialty you have.
Yeah, thank you. I first started quite a few years ago, but in the car trade. I thought I wanted to sell cars, and my dad had been in the car trade forever and said, no, you're going to do finance, which I bucked against, and I'm really glad that he didn't give in. So I then became a BDM, our finance manager, and was in the trade for almost 20 years. From that, being with John Hughes, we had a broker division, Australian Auto Finance, and I transferred through that, then went on to Yes Loans with Steve Sell, and then just progressed. I thought it was time to do my own gig, and so I'm luckily aligned with the New Age group. We've got New Age mortgages, New Age of both vehicle and asset finance, which is me. We've got an accountancy firm, we've got financial planning, and we've also got a settlement agent. So I suppose being aligned with them, my big thing would be more to assist people getting into a new home, getting them a better borrowing position by consolidating their debt, or if they're looking for a new car. And so everything up to farm equipment, we've got quite a few contacts out in the farm industry. So we're quite diverse in what we lend.
Truly the one-stop shop. Well done. So I suppose based on you, I know that you and I have talked a lot, and you've got a real specialty in that consumer asset lending space. And you and I have been talking recently on a few of the changes around the lenders. Maybe there's a bit of a changing of the guard going on there. Can you give a bit more information on that?
Yeah, I think so. There's, first of all, within the last couple of months, I think the big shake-up was when Macquarie changed the way that they were going to pay, and that is in the consumer space. So thankfully, if you do a little bit more commercial, it wouldn't have affected you just as much. But I think my main concern was, well, who else is going to follow suit? Thankfully, nobody else has in the lending space yet, none of our panel. But the other thing is, I know a few people it's affected in the consumer space who would rely heavily on Macquarie. So what I've found is that there's a lot of personal loan lenders now that are starting to fill that gap and coming into that space. And a lot of people haven't really considered quoting with them and just seeing how competitive they may be, or it may actually be better for their customers to take on a product like that.
So a lot of people maybe have shied away from that space in recent times because of the fear around bid and consumer asset lending. How have you sort of transitioned in that or found that change, or has it been really matter of course for you?
Well, the good thing is, I mean, you think about personal loans a few years ago, they were like 15 to 25%, and that was it. It was, they weren't very kind to our clients, but, we've got rates now starting from 4.45%, and that's fee-free. The other great thing is you can do a soft touch. So you can find out from whichever lenders that you have on board who's going to give your client the best rate. Generally, it's based on their credit score. They'll run that first. And so you're able to get all of that information before even lodging an app. And I think that gives you a competitive advantage. Also, now with our lenders, obviously there's 90% of them will accept DocuSign. Our turnaround times make us look like heroes. So that helps too.
Yeah, awesome. That speed to market. So I suppose with the COVID impact locally and on the economy, it's probably had the reverse of what everyone thought it was going to do when this all first kicked off. What are you seeing going out the door? What are you funding most at the moment? Apart from Land Cruisers.
Land Cruisers, Rangers, and you can't get your hands on them. That's the issue. So no, it's interesting. It's a mixed bag. Everybody's open to financing anything that they want. And once again, I go back to the lenders. We're over maybe the middle of last year, towards the end, we were hearing a lot of no's, and there were a lot of restrictions placed on guidelines. We're seeing that ease up so much more. And it's making our jobs a hell of a lot easier again. So you can feel that shift as well.
Yeah, awesome. So a final point, what's 2021 going to look like for you? What are you looking forward to? FY 2022, I should say.
I was going to say 2022 travel, hopefully, but on business sense, just, you know, we're growing each year a little bit more, and if we just continue on doing that, it would be nice just to see us keep it slow but steady.
Cool, awesome. Thanks for your time. Over to you, Nick. So, Nick, same question to you to kick off with. Tell us how you got into this caper of broking and why you've landed where you are as perhaps a bit of a specialist.
Well, I actually started in broking back in 2013. I was actually running a property business, and I was dealing with some brokers that probably weren't that good in the space. So I was actually told by one of my mates that I should become a broker because he thought I could do a really good job at it. So I signed up as a broker, did my Cert 4, and that was 2013 when I first started my business. And you know, fast forward 8 years, and here we are with an office in Vic Park. It's the only Keyland branded office outside of South Australia. I'm a commercial and private funding specialist, and I run one of the biggest brokerages that Keyland's got outside of SA.
Yeah, wow. So you are a specialist in that commercial space. I know, as am I sort of play in that space a little bit. And one of the things that I've seen recently is perhaps a trend of the major banks maybe winding in a few of their policies, especially around servicing. What are you seeing in that space?
Oh, absolutely. So we're seeing them increase their interest cover ratios, and there's also some covenants that have come in relation to LVRs. They're being a little bit stricter on the LVRs that they're putting out at the moment as well. So what we're seeing is the covenants there will come back to possibly bite some borrowers at the moment, because asset values are inflated on what I would consider fair value. So as those, you know, come out for annual review in 2, 3, 4, and 5 year time, what we'll find is when the values return back to something that's more fair value, they might find themselves outside of their LVR covenants, which is going to cause them a little bit of an issue if they've got to sell some assets or put in some cash into it to reduce their LVR. So they're going to find that quite tough in the years to come.
So what are you recommending then clients now do, given that that's potentially a bit of a headwind for them now?
So I guess, you know, possibly faster amortize their loan up front. So instead of just taking a 15-year loan and just paying it off over 15 years, really sink as much cash into it as you can in that first 3 to 5 years. That's going to see you come off your LVR sitting at, you know, 50% inside that first 5 years, which when your LVR gets done on your annual review, it's probably not going to affect you all that much.
Yeah, cool. So what about the lenders who aren't quite fitting the box of the mainstream? So they have wound in policies and they're trying to pick the cream out of the market. How are you finding that space?
So I'm actually finding that a lot of my private funding partners that I use out there to do some of my bigger deals are actually doing some really, really good stuff. They're moving the LVRs a little bit to suit the deal. I did one recently here in Perth, which was a $7 million, 50% LVR deal. But in order to show servicing, we took some money that they got from shares. We also then took in the business revenue and a bunch of other stuff and some sell downs that they were in the middle of doing to reduce their debt. So that then allowed us to go in and do a $7 million transaction up front. Now, no bank's going to do that. So you're going to a private funder where you're getting that $7 million, you're getting it at, you know, 799, which all things considered is actually a really good rate. And the fees were quite palatable to the client as well. They'll be in and out of that deal in 12 months and back into a major bank in no time.
So I suppose the message there is just because a major bank might tell you no, or it's not a preferred deal for them, that it's not the end of the world for you. Got a little visitor there, mate.
Hang on. Yeah, can you hang on 2 secs, Hunter? Dad'll be with you in a minute. As you can see, school holidays, and we've got
school holidays.
No.
So the age of apprenticeship in your office has obviously come right down.
Oh, absolutely, mate. He helps me do a lot of my office work during the school holidays, putting folders and stuff together. In return, he gets Lego.
Yeah, right. Well, good payday. I wish I got Lego for my job. So what type of trends are you seeing out there? What are people buying? You know, is it the traditional sort of stuff that you're seeing at the moment? Are you seeing any particular move to a market?
The big one we're seeing at the moment is people actually buying their own premises. So, for example, we're seeing, you know, owner occupiers going out, buying the premises because it's actually cheaper for them to buy than it is to rent. So when we're doing that, it's good for the business. They're putting money back into the business instead of putting money into someone else's pocket with rent.
Yeah, for sure. And I suppose in the view of diversifying broker income, it gives you then the opportunity for things like fit out and other funding opportunities that come with a property acquisition, I suppose.
Absolutely. And you're also probably then taking on their home loan. You're probably doing a little bit, most of them are buying through self-managed super funds. You're taking on their home lending, you're taking on their asset finance lending as well through their business. So that gives you some really good opportunities to then go out and add value to what they're doing as well.
Awesome. Well, same question to finish up with you, Nick. What's FY 2022 going to look like for you?
Well, look, the growth that we've seen through the business, and we're not just in my commercial and private funding business, but across Fusion Group, we're actually seeing that there's a lot of growth out there in our broker-to-broker space, where brokers are looking to diversify their income. They really are looking at every opportunity they can get out of their business. So my insurance business is growing through our broker-to-broker, my private funding is growing through my broker-to-broker, and our commercial business in general. We're seeing a lot more people getting really comfortable in the non-bank space. Like you said, just because a major won't do it, it doesn't mean that there's not an option out there. Now, that means that they're having to go to a broker to get those options because they really don't know where to go to find them. So we're going to see a lot more clients coming our way looking for a broker that's experienced in the commercial space. So if you're not experienced in that space, it's a really good opportunity for you. That's
awesome news. So look, on that point, I'm going to wrap this session up. Thank you too for your time. They are state councillors, as I said, and with the other two that couldn't be here today. If you've got any issues, questions, burning, questions or desires, you feel free to get into contact with any of us. And we'd love to hear your concerns and questions. We're your conduit through to the board in terms of all things strategic direction and your concerns. So we want to make sure they're heard. To that point, if being on the council is something that's of interest of you, also feel free to reach out and have a chat. We're always happy to expand the team into people who are looking to give back to the industry, but also to be at the coalface a little bit and get to understand the industry a little bit better. And that's certainly something I've found from being a councillor. With that, I'm going to hand back over to you, Mark. Thank you, guys, and I hope you'll see you tomorrow.
Thanks very much, mate. Appreciate everyone's time as well. And as you can see, there is a lot of experience on our councils, so please do reach out to them. These are brokers that are broking every single day. They know exactly what the issues that you're going through as well. So please do reach out to them if you need to. Okay. But that does bring us to a close for this morning. Now, I hope you got a lot out of the data today. We'll have another chock-filled session for you tomorrow. Before we close off the summit, though, there are a few quick notes to cover off. We just want to acknowledge our national sponsors again for their time and their support. And as we mentioned, you receive all of their details after this session as well by email. There will be a 1.5 CPD hour email that will come out as well. That will have the survey as well. So please do fill out the survey. We do love all the feedback that you can give us. We want to make sure that these are the most engaging sessions that we can give you. So any suggestions or any feedback is certainly well welcomed. We do have our second session tomorrow. That's at 10:30 till 12 Perth time. So please, if you haven't registered for that, please do so. That's on the website tab on our website. We do have our keynote speaker, Beck Smith from Wellness and Smith, who will be speaking to us about practical strategies for stress reduction. Now, on the 15th of July at 9:30, there will be our next Q&A with Whitey session. Always a blast, these ones. So we're going to have Matt Rogers from RBG Lawyers around critical issues within the industry and how they can help you. Again, you can register via the website on there. We also have had to, unfortunately, change the date of our national conference. Obviously, for the events that have been happening nationally over the last couple of weeks, we were a little bit hands tied to what we could do. It was meant to be at the end of this month. Obviously, that would be creeping very, very close to border closures and everything like that. So we have changed the date, and that is going to be the Friday, the 5th of November. Now, if you haven't registered as yet, please, you can go to our events page on our website. I would love to see a big WA showing, and I'm sure Trent can agree on that one as well. We want to have as many WA people come over to the Gold Coast as possible, get the old WA flag and all that type of stuff out, I'm sure, and have a bit of fun over there. It's going to be a very, very good conference. I'm really, really looking forward to it, and we'll have a good gala dinner afterwards as well. Now, we do have other webinar recordings on our YouTube channel, and you can go grab other CPD points on there as well, and they will be on the webinar tab on our website as well. But that's it for now. Please do have a great day. See you later.